Good morning, everyone, and welcome to the European crossover webinar. And just checking up here on the audio. Okay, great. The audio looks okay. I'm doing the webinar using my MacBook. I thought I'd like to start doing that with this as opposed to, we had some mic problems yesterday with the other computer. So hoping that I prefer probably this may be the better way to go. Using this MacBook. The screen's smaller, but I think it works out better overall. But we'll see how it goes. But anyway, so it looks like we got the screen issue worked out. We're all squared away now. And let's take a look here with the euro dollar. Obviously, we continue to remain under pressure. We came as low as the 1035 area, I think it was, and we continue to remain under pressure. And obviously, the biggest story is with the cash dollar index. And let's go there. You can continue to push higher now. In order for the dollar to go on and get out of this bearish stint that they were in, we're going to have to go on and close above this 97.89 for today. That'll be key if we can do that. And like I said, the day's still early, but that's what it will take in order for the yields to get out of the bearish stint. It doesn't turn it out to a full-on bull, although we talked about this. The market, had it just been from this week, that would not be the case. But we did come back down this last week and test here, and now we'll come back up. Now, it doesn't turn out to full-on bull. We have to be get a close above 98.65 to do that. But it certainly would be, it's certainly in a better position than it was last week if it had just rallied back from here. So, and we are above that 98.11. We haven't added on, but we'll see where we go from there. Obviously, the dollar yen pressing up against this key 927 is huge, but it's been coming for some time in the sense that it simply didn't want to. And I'm a bit surprised. I mean, other than the strength in the equities, I think to me, the equity's already pulling back. I mean, it's almost like someone who shows up late to the party at, at 2 o'clock in the morning, says, okay, I'm here. Where's the drinks? Where's all the food? That's what I think about the dollar yen. It doesn't even make any sense at this point. I mean, considering where all the equities have gone to and the whole China thing and everything else, as I said before, this market ought to be around 1150 by now. But the party's over, folks. I mean, not that the equities can't rally, but everything's already been done. I mean, you think of it this way, it'd almost be, and let's move this here. This is just since October 1st, okay? Just barely a month. This be if someone said, okay, guess what? Now's the time to, we really need to get long in the equities right now. I mean, honestly, I don't even get the yen at this point. It's been dragging, kicking and screaming, and now here it is about ready to touch on stops. I mean, honestly, it's the silliest thing I ever saw in the sense that if it's spent this whole time fighting this move, and now it acts like it wants to move now and close above 927 now. We'll see if it can. I mean, the press is that now we're anyone that's short now, from a technical standpoint, may be looking just to go on and cover and get the heck out of Dodge at this point. But to me, like I said, it seems, and that may be just what it is. It's and we talked about this earlier in the week, that we could run into a situation where if we do rally, it just kind of sits there, and then all of a sudden, within a couple of days, we're already going south. But I mean, the whole announcement, all this other stuff, they're getting ready to do that anyway. So it may not be till next week, towards the end of next week, or maybe later, so that Trump can make a big deal about it. Presentation. So I don't think that we have anything to worry about over the weekend. Looking at economic reports. Let's take a look here. And I'm doing this on the MacBook, so you're not going to be able to see the Reuters feed, but at least it's not going to show up on the MacBook. We did have German exports, which were very, very good. But then again, like I said, if you've been sitting in the basement all along and you take 3 steps up off the basement, then I guess it would look good. So I really, they're making a big deal about it, but honestly, it's really not that big of a deal if you look at what the euro is, where the euro is, and you're not seeing it. I mean, it's the same thing, so to speak. Now you want to improve. Well, the euro's in the dirt now. I mean, it's hard to get anyone to step up and say, okay, we're ready to buy. Now you saw a little bit of a rally up here to 10.54, and now the euro's kind of slid back a little bit. I mean, when it needed it, when it was above 111, that's when it needed to have a good German report. Now it got it, and it's a little bit too late. But like I said, like the firemen showing up after the house is burnt down, and they show up and with 2 fire trucks, which didn't do any good if the house is burnt down. And like I said, the euro still retains its bullishness, but hey, try and tell that to someone who's been long, since Monday or Tuesday or even Wednesday, and say, okay, we're here. And especially going into a Friday, hard to get anyone juiced up at this point. But we did get French industrial output came in line. And then later on today, we do have Canadian housing starts, as well as building permits, and also the Canadian employment. And then we have the one thing in the States we'll have is University of Michigan preliminary data. That'll be out at 10 a.m. Eastern. Reuters polls for 95.9. The prior was 95.5. And oil finally started to turn lower. I mean, it tried to even push even higher yesterday, but it's turning lower. Like I said, the move up in here has been the talk that they're going to get the deal done. Then yesterday we got the Chinese ministry comments in the European session, and that got us up in here. We kept hanging on a bit, and now basically all we're doing now is returning back to where we were a couple day before yesterday, or at the end of yesterday when they started to sell them off and came off rather well. So once again, like I said, now this is starting to peter out. So that's what I'm saying. Makes me kind of laugh that now the dollar yen wants to finally show up at the party and press. And it's a little bit late, but from a technical standpoint and from on a Friday, you can certainly see where some shorts might just say, you know what, maybe it's better for me to get out. We'll go into the news. Like I said, I'm doing the webinar on the MacBook, and I think I'm going to start doing it this way. I prefer to do that instead of on the main computer anyway. So let's see how this works out. So it says German exports posted their biggest rise in almost 2 years in September. Data showed on Friday providing some relief amid widespread concerns that Europe's largest economy would dip into recession in the third quarter. Federal Statistics Office said seasonally adjusted exports recorded an increase of 1.5% on the month. This was the biggest increase since November 2017 and compared with economists' expectations for a rise of 0.4%. Well, there's no doubt that the industry is in recession. The entire German economy could have avoided another contraction and hence a technical recession. At the very last minute, said ING economist Karsten Beschke. The economy shrank by 0.1% in the second quarter, and the recent data have suggested manufacturing fared badly in the third, which could put Germany in a technical recession, usually defined as 2 straight quarters of contraction. Today's data suggests that there's been hardly any negative drag from the trade on third quarter gross domestic product, and yet some private consumption looked like it had increased slightly, and construction was flat or positive. Germany's export reliant manufacturers have been suffering for slowing the world economy, and business uncertainty linked to a trade war between the U.S. and China and Britain's plan to leave. Data published this week painted a mixed picture of the industrial sector, with output falling more than forecast in September, and orders rose more than expected. Speaking about Friday's data, economist Jens Niklas said, "This looks like a revival in foreign trade, but looking at the whole year, September is more of an outlier." He said foreign trade had been rather weak throughout 2019, and added that the risk in overseas trade had declined, but had not disappeared. Okay, I'm not going to spend any more time on this, but here's the key thing that you can go and take away from this is, one moment. So it probably takes away from the euro completely falling apart, which may also have the dollar kind of run out of gas up in here. Not in a big way, but and we may still finish above the 97.89. But as far as the euro goes, let's put it this way. If you were thinking about getting short here and thinking, boy, the euro is really going to fall apart right now, that may not be the case now. That's what I'm saying. Now you don't have that impetus to go in and sell into it hardcore. It may not be able to rally a lot, but it may keep it from falling. And still, like I said, technically speaking, when you look at the euro, right here, we're still in a bullish case. We got past the 38%. Bear with me. But we're still holding above here. It's just that, like I said, try and tell that to somebody who got long on Monday, Tuesday, or Wednesday. Probably not too thrilled about it. But like I said, as far as, taking a new leg down or whatever, well, with the German data, it probably takes that away. Then doesn't mean we can't come off a little bit, but it probably does take that away. And going on to the dollar. The dollar held on its gains versus the yen and the Swiss franc on Friday as the China's U.S. government agreement to roll back tariffs on each other's goods supported riskier assets, even as some reports suggest a preliminary trade pact is far from a done deal. The yen also nursed losses against the euro and the Australian dollar as progress in resolving a 16-month-long trade war between the world's two largest economies weakened demand for safe havens. China and the U.S. have agreed to roll back tariffs on each other's goods in a phase one trade deal if it's completed, officials from both sides said on Thursday. However, there's still some skepticism about a trade deal as officials inside and outside the White House have bristled at the notion of giving up punitive tariffs. Muddying the water further, White House spokesman Stephanie Grisham told Fox News in an interview on Thursday that the U.S. is very, very optimistic about reaching a trade deal with China soon. Starting trading near a 2-week low after the Bank of England unexpectedly voted to cut interest rates due to uncertainties posed by Britain's fraught exit from the European Union. The remaining 7 policymakers makers on the board voted to keep the policy unchanged, but Governor Mark Carney said others that they would consider a cut in the future. On the whole, senators are likely to remain supportive. And we can see in the other markets why stocks are so strong. We need to still figure out that the U.S. and China will sign this deal, but the mood is so far supportive. Trump has used the tariffs on billions of dollars of Chinese goods as his primary weapon in a trade war that has hurt global growth and rattled financial markets this past year. The dollar held steady at 109.34 yen. The pound at 28.15. To date, the Bank of England has released has resistance from the U.S. Federal Reserve and ECB in cutting rates further. So with that, let's go move into the analysis. And just give me a moment. Like I said, it's a little bit herky-jerky because, like I said, I am using the MacBook, so bear with me. The one issue I had was the bias chart. Now, I'll be doing it, but I'll be doing it from the other computer until I get that resolved. It wouldn't transfer. Oh, actually, it transferred over. But it transferred over upside down and inverted also. Now, it sounds like two of the same, but actually the numbers were all jostled up. It looked like some kind of a strange Egyptian writing or something. I don't know what's up with that, but so I'll be doing it from the main computer, and then we'll take it from there. Hopefully over the weekend I can get that transfer over. Because like I said, going forward, I'd like to just do this webinar from the MacBook. Probably make things a whole lot easier. So look at the euro dollar. Said the euro succumbed to further selling, sliding to 10.35. The pair closed at around 10.50. Technically, the pair remains bullish, although under duress. A close above 11.07 negates the bullish outlook. Resistance is going to be 10.82. So let me mark that off. Hopefully by Monday, I'll have the bias chart. We'll have it on the screen, but I have it on the other computer. I'm updating it, and I will get that posted. Support on this. Let me take a look. Bear with me. Well, the key, as I told you, is going to be 10.07. If we close below 10.07, that's it. It kills the bullish picture. But support is actually going to be 10.18. Right here. So it's going to be 10.18 here. So let's go mark this off. And with that, let's go move into the cable. Cable has finished lower for the fourth consecutive day, albeit in a tight range. Support is 27.43, confluence of 27.63, with resistance at 28.66. Bear with me. So you can see here for the fourth day in a row coming down here, but as I mentioned, support's going to be 27.43, confluence with 27.63. Bear with me. We'll split the difference and call it 27.50 for today. As I mentioned, we're looking at 27.63. You can see that here, the 23%, but we have 27.43. We'll just split the difference and call it 27.50. And on the upside, it's going to be 28.66 on the resistance going up further. 28.66. We'll move into the Aussie dollar. Okay, no changes from the prior day. Also remains mired in a 40 pip trading range. Resistance was 69.44 and support at 68.52. And we're certainly continuing to weaken here. So once again, it's going to be support of 68, going to be 68.52. And put this on the bias chart. As I mentioned, hopefully on Monday we can show the bias chart. When I showed it on the MacBook, for whatever reason, because I used to have another screen hooked up to the MacBook, and I guess it must have saved that, and it still has it, like pushed off to the side. And then when I uploaded or downloaded the most recent file, they came up all backwards. So, and resistance is going to be at 69.44. But you can see we're still pushing here low, albeit in a tight range. Boy, this Kiwi continues to just remain on the weak side here. Look at this. Kiwi pressed new lows, although in a tight range. Support is 63.26 with resistance at 64.36. So really no changes here in Kiwi, but you can see we're still weakening here. So once again, it's going to be, or at least for now, this one's going to be 63.26. With resistance at 64.36. That one remains the same, but we've moved the bias chart a little bit lower. And we'll move into the Canadian dollar. Now, we do have Canadian jobs today. And, that's a bit, from a technical standpoint, you can see why we're stronger here. But, God, you would think that there'd be a bit of a risk as we come into Canadian jobs data, and the risk that the number comes in stronger. Blake posted in the chat room, I think it was TD Ameritrade, was stating that they think the risk is that we're in the final phase or final lap for the Canadian economy, and that we could start to weaken. I think the risk would be if it comes in a bit stronger, but you'd probably, I guess, pick up the the dip on this. Technically, it's moving higher. We didn't get that to close above the 31.82. Remember, which would have just shot us up. But it still is in a position to drive higher at this point. My thought would be the risk would be a dip into the report, or the report come out good, and then a dip, but they'll probably pick up that dip. Okay, so many things have changed around here. It's amazing how the dollar CAD was so bearish. Then remember here, and then it was falling apart. Then it turned around and shot up like crazy. But then it could, despite an entire week of trying to take out the highs, it couldn't do it. Then it fell apart. Now it looked like it was really going to come apart. Then it came back, but it still couldn't do anything. Now here we are back again. Now we're starting to move up. So it's really been an oddball here with the dollar CAD. Really just strange in a sense. But on a short-term basis, you can't deny that it is a bullish. We'll go into the analysis that we had for this. So the dollar CAD remained in a tight range ahead of Friday's jobs data. Resistance is 32.12, which is a 50% of 3042/3383, followed by 32.57. And you know how this CAD, sometimes when it hits these reports, it can really get going. So 32.12 followed by 32.57. Support is going to be 3136/3222. So let me go and mark these on the last chart in a moment. And we'll move into the peso. Says no changes in the dollar peso. Resistance remains at 19.23.6 with support at 19.08. So no changes. I mean, I'm not going to go off on another tangent, but we've been just going backwards and forwards within this tight range. And I've made the case that there's nothing bullish about this other than it's just holding. So those that have done well on the downside, they're just not getting rewarded. But the market has had, look how many days it's sat there. It's not like as if we jumped up. So that's going to remain the same. Excuse me. And let's go move into the dollar yen. Okay, the dollar yen popped above the major pivot of 927. Friday's close could see shorts pay up. Immediate resistance is 957, followed by 981. Like I said, to me, I think, despite what I was saying earlier about it's showing up late to the party and all this other stuff, I think, we always talk about the Friday, moves, because in FX, quite often, I mean, you'll have a lot of retail, and I'm talking about real, very small retail traders. We're all retail traders, but that will not be in a position to hold these positions, for lack of a better word, or want to hold them over a weekend. So the fact that we're still up here, you'll probably, the market is going to be held hostage in the sense you're going to have that undertone bid, knowing that those weekends that are short will need to be covering or will cover. So the market's not likely to go and pull back. Do I think it's a full-on, bullish move? I don't think so, and that's what I'm saying is it's had every opportunity to be doing that and hasn't done that. But because we're still bid on a Friday, I would think that unless something dramatically changes, it's going to likely stay that way. So resistance is going to be 957. I don't think it's some kind of a big breakout. If it would happen in the middle of the week, then I would have. Like if this move would have happened if this is what we were on Wednesday, I would have given more credence to it. At this point, because then we could have added further onto the gains. So that's what I'm kind of like. Obviously, it's a Friday, so it's carrying a little bit more weight because of that. They know people are going to be forced to cover. They don't want to hold it over the weekend. What if they announce that the trade deal is done, and then you open up with the dollar yen, 80, 90 pips in your face. So that's why it's going to keep that undertone bid. I just don't think it's necessarily a big buyout at this area. Not buyout, but big bullish move, but we shall see what happens. The downside for support is going to be 878. We'll move into the dollar index. The dollar index is attempting to negate the bearish case. The index will need to close above 97.89. Resistance is 98.43. A daily close above 98.65 reignites the bullish case. So you can see where we're at right now. We'd have to get up above 98.65 in order to get us the bull full on. Okay, and that's right there. You see right there? We have to close above these highs right there. And right now, resistance is going to be right there at 98.43. So we are above that 98.11. I'll give the dollar the props. Obviously, it's for the whole China news thing, but I mean, once again, just like the dollar, it's just barely above that, but it is above it nonetheless. But we need to get a close of 97.89. The day's not over. We'll see what happens. But once again, thinking that we could get an announcement over the weekend, and I don't think that's going to be the case. Unless it was going to be announced like tonight, because the administration would want that to hit the news cycles. So, and I think that they would want to play it up big for the market. So I don't really see it happening over the weekend. If it did, it'd be an announcement that would happen like tonight here in the States. And I don't really see that we're there yet because the China was still saying, hey, you need to go and remove these other tariffs. So we'll see what happens. I just don't think it's going to come yet. Maybe towards the middle / end of next week. But we are higher nonetheless. So support now is going to be that 97.89, which is important. They do need to get above that. That might be a little bit too rich. Let's go put here. That is key though. But it is 97.74, but you know they're going to be trying to buy back into this 97.89. So we'll go with that, the 97.89. We'll see what happens, which is key. And on the upside, it's going to be 98.45, 98.43. Apologize. With that, we'll move into the cross rates. Boy, we are just stuck in the mud here. Well, I said the same thing yesterday, and there's no change. I mean, we're just not moving anywhere. We're just stuck in the mud here. And actually, we have even, for right now, with the days young, have what looks to be a little bit of a greystone doji, but we are just absolutely stuck in the mud. Here in the QEN, resistance is going to be 70.20, which may even sound a little bit rich if we were going to go and push up in there. But that's where the real resistance comes into, which is 70.20, and then support on the downside is going to be 68.83. And you can see the 70.20 right there. So no changes there. We're going to move into the euro yen. Let's go and do it here on the daily because it looks like we're not doing anything. Yep. Same thing here. Look at this. Oh my goodness. It is really dead here. Small, medium-legged doji, but we're just dead in the water here. So no changes here in the euro yen. Upside is 2097. We're not that far away from it though. 2097. We did come up and just jump a little bit above 21, but we paired back. So it's going to be 2097. Actually, we can actually move that even a little bit higher now. Let's see here. It's going to be 2112. 2112. And the downside will remain the same, which is 2037. With that, we're going to move into the euro on. Well, we've kind of held our own. Never looked like there was a potential for this to go and break down. And we've held our own here so far. So we've got 59.92. That's going to be the bonus chart support for today. You can see that key level. And on the upside, you can see it right there, 60.95. There. We're just in very quiet trading here during the autos market time, so 60.95 right there. Let's go into Euro Kiwi. Boy, look at this. I mean, this is just dead trading. We are just not going anywhere here. Resistance is going to remain the same. It's going to be 74.19 with support at 73.16. And you can see that ended up holding down here. We got as low as 73, looks like 73.13. We had bias chart support at 73.16. And we've come off of that. Not too bad, but still very quiet trading. Going moving to the ASEAN. Flying through this because we're just not seeing any real changes here. ASEAN still keeping its bid up just a bit here, although it has paired back. But still keeping a little bit of an upside bid. Bias chart resistance, you can see right there, is I have the pink line, it's 75.62. We supported 74.73. So boy, we are trading in a very tight range. Look here, it's just 74.73, which that actually held the market yesterday. You see that. But we're keeping a mild upper tone bid, but still relatively quiet here. With that, we'll move into the guppy. We are just unbelievable. We're just not going anywhere with this. Some of these pairs, I guess they're held hostage until we get past this U.S.-China deal. Because of the yen, you know, the starting weekend a bit with the BOE and the dissenters. And then Carney's saying that they could do a cut looking now, but obviously the yen is also losing some of its safe haven bid. So we're just really stuck in the middle. We even have like a bit of a spinning top right here almost. So no changes there. It's going to be 40.73 on the upside. with support at 39.70, very, very tight range. And lastly, sterling odd. Let's take a look at the 2-hour chart. We have visited the lower end of the range here, but we're stuck. Look at that. We're just stuck in the middle between these two levels. For today, you can look at this 86.70. But the real resistance comes in at 87. It just seems like it's a bit of a wide range. Let's pull this back. We're going to go and keep that the same. Here's the concern is we can move it down here. But the problem is that once again, if you get a little bit of a news, then we just quickly blow right past that. Not that we're still trading a very, very tight range, but once again, we're not going to really see any real good selling coming until we make this move up in here. And actually, you can make the case that this should even be a little bit higher right there, which is 87.07. We'll update that to 87.07. Downside remains the same, 85.47. So that's it here. Crude oil has already started back down a little bit. They always say you never want to sell crude oil on a Friday. Once again, like I said, unless they make an announcement, I just don't see an announcement yet coming because the Chinese were clamoring about, hey, you got to take off more tariffs and so forth. So I don't really see anything at this moment that would be announced or the risk that there would be. So I'm thinking we could end up sliding back. We are a little bit rich in here. Obviously, they can announce that we're going to jump up, but I think it's be something to be faded because they just keep hanging on for one more tune. Gold, boy, did we see a move. I haven't done anything, honestly, it probably because I've been focusing so much on crude oil, working with the Vine program and getting used to that. I just started using that program last week, trying to get more familiarized with it. But I left gold alone, but because I hadn't had the time to go and focus on that. But it turned out it probably was the best thing that happened. I probably would have got myself in some trouble down here, potentially trying to pick up a falling knife. And so it probably turned out to be the best thing. Honestly, I didn't even notice until I saw some people in the chat room saying, boy, look at these moves. I'm looking like, holy smokes, the thing really did come under some kind of a pressure. So honestly, it probably would have been the best thing because although I've tried to steer away from catching falling knives, I've actually found myself, I've come out okay overall, but I did not like it when I, over the last month and a half or so when I would actually be doing that and find myself adding on extra positions, but, coming out relatively unscathed, but probably was the best thing to happen. I probably would have got myself into trouble coming in here. But certainly you can see with the market, it really come under some quite a bit of a pressure. Let's go back in here. I did pull up on the chart later on in the afternoon. It seemed pretty clear. I don't know if we have it here. I have it on one of my other chart systems, but when it broke this area right in here, I think I have it on the 30-minute. Let me see. It's on a different charting package. I'm looking at the futures, but it was pretty clear when it broke. And boy, when it broke, you could see it just start to come apart and hitting some levels and just come apart. But boy, did this thing! You'd have thought after this big move, we saw a decent, okay rally, and then to come apart. I wouldn't have. Well, the jury was still out how much further we were going to fall because the market's been fooled a couple of times when they thought it was going to come undone, and it didn't. But it certainly looks like. The next true case is remember it was 1457. It was 1448 and 1457. I remember that. So I'll be looking at those two on the downside. But Yeah, 1457 and another 1448 on the way back up. And the way I trade, I know that I think Stelios was saying he was buying silver yesterday, but the way I trade, I'm not in a position to be holding positions, overnight, and like to trade more on a very intraday basis. And boy, when you get this thing to move like that, there's no let up, and then we do get an eventual let up. You can see here as it came off, but you can see it's in very, very tight trading as we work out, and then we start to give back a little bit. So probably worked out best for me that I didn't even get involved in that. One thing we're looking at, though, we are seeing the buns continue to be weaker. Look at here. I think Steve mentioned that yesterday or day before yesterday. I think I heard on Face. Wow, you think this would be more supportive for the euro. Now, obviously, we can see why it's even lower here, higher yields because of the German export data that came out. But that's another thing you'd have to once again focus on, is that why you wouldn't think that the euro would completely fall apart here. Once again, like I said, it still remains bullish. That's why I think that the one thing is we have that China news coming up, but you could see the dollar come back in a bit towards that 97.89. And so I wouldn't be surprised if we were to come back. We may not make it all the way, but maybe we end up closing like at 97.92. So just on the cusp of it. But we shall see. But anyway, thanks for joining us here on the European Crossover webinar. I'll get the bias chart posted and catch y'all later in the chat room.